Hey everybody, welcome to Mortgage Today for Wednesday, August 21st, 2024. And oh, what a day it was, and it really was. UMBS were down 13 basis points in early trading. S&P futures were up 8.75 points. There are alarming headlines regarding seemingly underreported labor market revisions hitting the mainstream today. Given the big role of the labor market in the rate world these days, that seems highly relevant at first glance. But as was the case with the last time that the quarterly census of employment and wages was revised, there was plenty of sound and fury, but there wasn't as much coming from it as we would have thought. So the quarterly census of employment and wages revision for March of 2024 was revised down 818,000 jobs. That means over the last year, 1 in 3 jobs that were reported as created weren't. They don't exist. And this is the data that the Fed is using to make policy decisions, which is super scary. It hit this morning. It isn't a new jobs number. The market already expects a negative revision between 600,000 and a million for the 12 months ending March of 24. While the focus on this topic, which pertains to data that is almost 6 months old, because it's a very boring, low volume, uninspired day for bonds despite incidental gains. FOMC minutes are due to be released today at 2 o'clock. They pretty much came and went without much of a bump. The September Fed Fund futures are leaning 67% towards a 25 basis point cut and a 33% chance of a 50 basis point cut. At first glance, and based on conventional wisdom, today's most relevant calendar consideration for the bond market should have been the 2 p.m. release of minutes from the most recent Fed meeting. In reality, however, it would have been hard for bonds to care any less. This isn't a surprise considering we already knew the Fed discussed hitting it. This isn't a surprise considering we already knew the Fed discussed cutting in July and has all but promised a cut in September. The day's biggest source of inspiration was confusion surrounding the scheduled 10 a.m. release of the QCEW payroll data as discussed earlier. The UMBS ended the day up 7 basis points at 100.83, so we got a little bit of a rally there. At 100.83, that does bump us up into this new range, so we got this brand new Fibonacci line based off of having enough data at 100.79, which has been tested a bunch of times. So we did break through it late in the day today. Let's see if we got enough bad news to hold above it. We also got some industry news. Mortgage banks posted a profit in the second quarter for the first time in 2 years. Net production income was positive in the second quarter of 2024, a welcome sign after 8 consecutive quarters of net production losses, according to Marina Welch at the MBA. With a pickup in quarterly volume productivity and closings to application pull-through, production costs dropped by about $1,800 per loan, which is huge. These developments contributed to better net returns even as production revenues decreased from the previous quarter. Almost 80% of mortgage companies in the sample posted overall profits, including both production and servicing business lines. After 2 of the most challenging years in the business, many companies are seeing the light at the end of the tunnel. Average profit was 17 basis points compared to a loss of 25 basis points last quarter and a loss of 18 basis points a year ago. The average volume was $492 million, up from $384 million in quarter 1.